So welcome back guys to my YouTube channel. So in today's video I'll be showing us how to make use of liquidity, okay, to take a trade in the market. So if you have a strategy already that you are making use of to trade the forex market, then you will be able to add this liquidity concept that I'm about to show us now, to be able to take like a sniper entry in the market. Okay, so this is what a lot of traders make use of in the forex market. So if you're able to understand this liquidity concept, then definitely you should be able to take like a sniper entry in the market. Okay, so how does this liquidity concept work? Okay, so whenever we are on our chart, okay, now regardless of the time frame you want to make use of this strategy, okay, so even if you take your entry on the 5 minutes time frame, the 15 minutes time frame, or the 1 minute time frame, depending on the time frame you take your entry, to be able to use this liquidity concepts here, we want to start from the daily time frame. Okay, so once you are able to go to the daily time frame, then we can come to our 1 minute, 5 minutes, or 15 minutes time frame to take like a sniper entry in the market. Okay, so if you want to add this strategy to this liquidity concept to your strategy, then definitely you should watch this video to the end, because this will show you how to wait for the market to be able to execute your trade accurately. Okay, so how does this liquidity concept work? So the way we want to trade this is to make sure we see price takes out like a previous low. Okay, so as you can see here, you will notice that this particular week was taken out by this candle. Okay, so immediately we notice that we want to see price close above this level. Okay, so that will be on the daily time frame. Okay, so once we notice that a wick here has been formed, okay, what we want to do is to wait for price to take out that level. Okay, so when price takes out that level, we can say that market has taken out liquidity. Okay, you can say that market has taken out liquidity. Remember, this liquidity is where most of our orders are. Okay, remember, market bought all the way from this particular candle, but the big boys needed to come back to take out the stop loss that was below this level here. Okay, so that's just the idea and the concept of liquidity and liquidity grab. Okay, so that's the first thing we want to see if we are going to be making use of this strategy. Okay, and if you notice also here, you can see that the same is also true here. Okay, there was a huge liquidity grab here. Okay, meaning that there were lots of stop loss below this level. Okay, so whoever took a trade at this point here had to place their stop loss somewhere here. Okay, and market had to come back and you know take out the whole stop loss at this level before deciding to move upward. Okay, so you can see that the key here is to make sure that price close above after grabbing liquidity. Okay, we want to see price closing above, so that will be like the first thing. Okay, and also you can see that this pattern keeps on repeating itself. Okay, so you can see that the same is true also. Okay, after market took out liquidity here, you'll notice that market closed below. Okay, but later on, if we observe, we can see that market actually closed above. Okay, this was like the second daily candle, and then the next daily candle market closed above. But I'll be showing us how to take this entry here and how to be careful whenever we see something like this, whenever price close below. Okay, so after identifying our liquidity grab here, what we want to do is to make sure before we go to our entry time frame, which might be the 1 minute, the 5 minutes, or the 15 minutes time frame, what we want to do is to go to the 4 hour time frame. Okay, so it's to go to the 4 hour time frame. On the 4 hour time frame, what we want to see, remember on the daily time frame we say that we want to see the candle close above. Okay, so immediately as price is closing above this level, it means that what we want to see is this particular candlestick pattern here. Okay, we want to see an engulfing candlestick pattern. Okay, so price must engulf. Okay, remember this is one of our accurate pattern that we want to see in the market. Okay, so this particular blue or green candle, whichever you want to call it, should close above this particular candle. Okay, it must engulf this candle. Okay, so if it doesn't engulf this candle, do not take any trade. Okay, do not use your strategy, all right, with this liquidity concept. So there must be like an engulfing here. Okay, so you will notice that this is where the engulfing actually took place, and this was the close of the candle. So if we go back to our daily time frame now, you will notice that you can see that this was what happened here. Okay, so if price is going to close above after taking out liquidity, then on the 4 hour time frame we want to make sure that our engulfing candlestick pattern has formed somewhere around here. Okay, and so this will give us like a confidence in the market to take our trade. Okay, so if we go to the second setup that we have here, okay, we can see that market took out liquidity here and market started buying again. So if we go to the 4 hour time frame now, let us look for our engulfing candlestick pattern. Okay, so on the 4 hour time frame, you will notice that our engulfing actually took place somewhere around here. Remember this particular blue candlestick covers the entire of this candlestick. Okay, so do not mind the color of this particular candlestick. Okay, this is like a doji candlestick pattern. Okay, but what we are more concerned about is the body, and you can see that this little body here was covered by this particular candlestick. So if we are to wait for market to close here, so if we go back to like our daily candle, then we'll notice that the rejection already happened. Okay, so you can see that market actually closed above that this level here. Okay, after market has grabbed liquidity. Okay, so and then for our last example here, you notice that market actually took out liquidity here. Okay, but if we go to our 4 hour time frame, remember we want to see like an engulfing on the 4 hour time frame. So if we go, let us see if we can see an engulfing. Okay, you notice that when market took out this liquidity here, there was no engulfing. Okay, remember we want to see like an engulfing. Okay, so we notice that there was no engulfing. Okay, so we are not going to use whatever strategy it is that we want to make use of. Okay, but if we go back to the daily time frame, we will notice also that here, after this setup was formed, remember this particular candlestick did not give us our engulfing. Okay, we will notice that here market took out liquidity again. Okay, so since market has taken out liquidity, let us go back now to our 4 hour time frame to see if an engulfing pattern has formed for us to take an entry. Okay, so we can see that an engulfing candlestick pattern has formed. Okay, remember this is the candlestick pattern This is the particular green candle that covers this particular red candle. Okay, so immediately that happened, if we go back to our daily time frame now, we'll notice that yes, that market actually rejected and gave us this engulfing candlestick pattern. So guys, this is what we want to watch out for in the market. Once you are able to see this, then we can make use of our strategy to scalp the market on any time frame. So guys, I believe you've been able to learn how to make use of this liquidity concept. Okay, please, if you are yet to subscribe to my YouTube channel, kindly do so. Also do well to share this video to other struggling traders so that they can get access to this liquidity concept strategy. Okay, and you can leave a comment in the comment description of this video. All right, and definitely I'll reply to you. Okay, so thanks guys for watching this video. Cheers, and I'll see you in my next trading video.